Hi, welcome to the Market Alert for Monday, the 20th of March 2017. So on Friday, the market was fairly quiet to begin with. Then we had the sell signal appear. And if we just mark this up, you'll see the market eventually gets down to the scalp and then finds some support. And it was at this point I sent out a message to say that the market had become quiet and sideways, and then eventually we see the market moving back up as we go into the evening session. There was a buy signal there which failed, and then a sell signal which came into the market at 15 minutes past 7, which then went on to also give a profit. So I didn't do either of the two trades. As I said in my email, the market looked fairly quiet, happy with taking 20 odd points off the table, and that was enough because given the sideways nature of the market at the moment, the first hour tends to be the busiest, and once that's over with, we are seeing a bit of sort of plunge protection team bringing the market back at the moment, as seen by the last few days where the market's actually rallied before the close. That's always an indication that the plunge protection team are in the market. So in the daily chart, we've got this sideways market. The market's trying to get up to the 76% and failing at the moment. And in fact, Friday's high, you can see there, is lower than Thursday's high. So again, an indication that there's some weakness around in the market. And on the news front for Monday to get things moving, what have we got? Nothing. FOM Evans speaks at 5:10. That's actually 4:10 and 10:30 p.m. as well, because the US have gone forwards an hour. So just to bring those into line, that's what it's going to be. Actually, let me just check the time. This is actually synced. It is, yeah. So yeah, it's going to be 10:30 and 4:10. Odd times, I know, but that's what they are. What have we got on Tuesday? Anything to really get things moving? Existing home sales at 3 p.m. Thursday, Yellen speaking on Thursday at 1:45, and then Friday, nothing there either to get things moving. So again, we could see a bit of what we've seen this week going forward. And then finally, on the implied volatility, 842, this has moved down quite nicely. Let me show you how it looks on my chart. It's easier to see than the chart that's provided here. Just one second. Okay, so here's the 3-month chart, and if you look down into the bottom right, you can see down at 842 now. See how we've dropped off there markedly. The market's still not moving higher though, so it's still struggling, which is interesting. It's basically pointing to, well, we can't see any problems at the moment, is what it's saying. So this is being marked down. If we take out the, we've got the 815 low here. So that's what we're looking for. If this is taken out, this will just add to the potential of a decent correction coming. It's just the calm before the storm. We just have to be patient. As long as the momentum is sufficient to pull out 20 or 30 points a day, that's all that matters. You don't want too much volatility and you don't want zero volatility. So if we can have that balance, even if it's in a fairly quiet trading range, that's fine, because that's all we want off the table at the moment. We can take care of altering the settings and everything when the volatility does kick in. But if we can make money without too much volatility, that's even better, because then the market will move nice and steady, which is what you want. You want to try and get out of a position where you're getting 50 points in a bar, which you will see going forward, as we have seen during the last few years as well, which always makes it a bit more difficult. So even though it doesn't look like there's much happening, last week on the whole wasn't too bad, given the lack of volatility at this time. Right, that will do it for today. I will speak to you before or after the market's open, see how things are panning out. Other than that, enjoy the rest of the weekend, and as ever, thanks for watching. See you in the next one.